Did you open your mailbox and find an IRS CP 501 notice? This is your early warning that the IRS says you owe taxes, and if you ignore it, things can get a lot worse. In this video, I'll explain what the CP 501 means, what happens if you ignore it, and the best next steps to avoid IRS penalties, liens, and levies. I'm Brad Paladini, a tax attorney with over 12 years of experience helping people resolve IRS notices just like this before they turn into garnishments or bank levies. So what exactly is an IRS notice CP 501? Let's break it down in plain English. The CP 501 is a balance due notice from the IRS. It says you owe taxes and haven't paid them yet. It usually comes after the IRS sends you a tax bill, a notice in demand for payment, and you haven't paid or set up a payment plan. It's not yet a levy or lien notice, but it's a serious warning. So why did you get a CP 501 notice? You either filed a tax return, but didn't pay all the taxes owed, or the IRS filed a substitute for return because you didn't file yourself. You could also have old tax debt that's still on the books. The key point here is that the IRS has sent this notice because they want you to take action. Either pay the balance in full, contact them, or set up some sort of arrangement with them. Now, here's why ignoring the CP 501 is risky. You'll get more aggressive IRS notices like the CP 503, which is essentially another balance due reminder. You could also receive a CP 504, which is an intent to levy your state tax refund. After that, you'll receive either an LT11 or a CP90 or a letter 1058. And at this point, the IRS can levy your wages, your bank accounts, or your property. And penalties and interest continue to accrue and pile up. So what should you do after receiving a CP 501? Read the notice carefully, check how much you owe and for what year they say that you owe. Try to confirm that the balance is correct. Take a look at the tax return that was filed and make sure the numbers more or less are matching up. Then you need to decide on the next action. Can you pay the balance in full? If you can pay right away, do it on the IRS website. You'll avoid any additional penalties and interest. If you need more time, you could set up an installment agreement and agree to pay the balance over months or years. And if you disagree with the balance, you need to call the IRS and try to get to the bottom of why they say you owe this money, or consult with a tax professional to help you dispute it. How can you keep this from happening again in the future? Stay current on filing every year. If you're self-employed, make estimated tax payments so you don't continue to owe balances year after year. If you're a wage earner getting a paycheck, make the adjustments to your W-4 and have more money withheld per paycheck. So again, you're not owing year after year. If this video helped, please give it a thumbs up and subscribe. I post regular tips to help you navigate IRS notices, avoid penalties, and protect your income. And if you've received a CP 501 or later notices and are unsure what to do, book a consultation with my team using the link below. We'll help you review your options and avoid the IRS from taking further action.